Kathy Wood and her ARK fund down 12.5% over the last month. And now we learn the biggest monthly outflows in nearly a year. $803 million out the door in August. Again, that's the biggest monthly outflow since last September. Jason Snipe, what are we to make of this? Because even in some of the turbulence that had been hitting the market over the last, handful of months, money continued to flow in to ARK. Is this emblematic of where we're going from here?
100%, Scott. I mean, it makes a lot of sense to me to see what's happened, recently with the ARK funds. For me, obviously, when you see Powell come out more hawkish than expected, long duration names and profitless names are really going to take the brunt of the pain, right? And I know she's got a lot of those names in her fund. So for me, this makes a lot of sense. And I think the part of the run-up in a lot of these names in this bear market bounce was the exact opposite. As we were starting to run, looking at some of these names and potentially looking at a Fed pivot, going forward, there was some excitement around some of these profitless names. But going forward, man, this is going to be probably more of the story than it's not. So long duration, profitless names, I think, will feel a lot more pain going forward.
We put this story in noting that NVIDIA is in the ARKK because there is news on that today, Josh, which the shares you obviously own. It's down big. It's the biggest loser in the S&P, warning of those the sales hit from the licensing rule change from the government. I'm wondering what you make of this story, whether it changes in any way your mid to longer term thesis here.
Well, I think obviously companies like NVIDIA and AMD are going to want to supply data centers outside of just the United States. And China, they've already got builds done. So it looks like that's going to be a problem. They're going to have to either retrofit those builds with different chips or find another customer for that. And so obviously that's going to hit them this quarter. I don't think from a long-term perspective it's anything that they can't eventually work around, but it's yet another shock in a stock that's in a downtrend, in a sector that's very close to its June lows, in an overall ugly tape. It's just like the last thing this company needed right now. But there's nothing you can do about it. This is federal government stuff.
So, Weiss, I love the way that Josh analyzes that. He still likes the stock, obviously, longer term, and it speaks to one's horizon in investing in general. Yes, there's near-term issues. Yes, there is turbulence affecting the stock, and it may very well do that. And it's the recognition that Josh is able to do in all of that and still say, but longer term, I still love this name. I think that's an interesting perspective to have as an investor, speaking to those who are watching, thinking about their own portfolios, understanding short-term versus longer-term, even in a stock that you love.
Yeah, I think that's right. And if memory serves me correct, Josh is still up, a very significant amount in NVIDIA. When I was selling it at 79 years ago, on its way to whatever 300 and change, I think he was a buyer, so kudos to him. Here's what I'd say, though. There's not a chip company that's ever existed where the competition hasn't caught up and where the multiple hasn't come back down to earth. That's Intel, that's Qualcomm. You can just pick them. The graveyard's littered with them. And that will happen with NVIDIA. And perhaps Jensen Huang should have been wearing a parachute instead of a biker jacket to prepare for the decline in the PE, because that's what's happened. So this may be short term, but it's an important short term, as Josh says. Now, look, at some point, I'd love to buy NVIDIA because I do think he's a good CEO, but now's not the time.